Hello, everyone, and welcome back to this week's TradeFinder Live. It's so great to be back with you all, especially during live trading hours, and with Mr. Rob Roy, who I'll be introducing here in just a few moments. As always, we have to cover off some important housekeeping details about the session. If you've attended any of our live sessions or webinars, for that matter, then you've seen this disclosure disclaimer agreement. Essentially, the main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. This is available on our website at all times, so please feel free to read it in your leisure, read it in detail there, or take a screenshot of it now if you like, but that's the main point to take away from it again. Other than that, we do have a brief Q&A process portion of the session right towards the end. Rob will open it up to the time remaining, or open it up to questions with the time remaining to the multiple streaming platforms that we are streaming to. So we look forward to that as always. And all eyes are on the Feds tomorrow. Can they actually add another hike? I'm interested to hear what Rob has to say about that. And of course, excited to interact with you all. So thank you for joining us live. And at this moment in time, I'll introduce the man of the hour, Mr. Rob Roy.
Hey, Zach. Hey, everyone. Welcome to this week's Trade Finder. Still in the Dragon Capsule in sunny Florida, and it's bright sunshine today. So reminder of being in the mountains and being in the beach, two great places to be. One of the things that we want to talk about is the market. And as Zach mentioned, there is a big Fed meeting tomorrow. The market is kind of pulling back a little bit today, as you can see on the chart. In anticipation of the Fed meeting tomorrow. We have this trading range that we've been talking about, where we came in, pretty brief trading range. We tried to break to the upside. We came back down. We're back within the trading range as we just kind of wait and see what the Fed may see tomorrow. Oftentimes, especially over the last several months, there hasn't been a whole lot of anticipation on the Fed, more of would they give us a date for the rate cut? Now there's concern about a potential rate hike. The Chicago PMI came out today and it was really bad, down around 44. And as a reminder for those of you that aren't familiar, when you look at the PMI numbers, 50 is the key. Anything above 50 indicates growth or expansion in the economy. Anything below 50 indicates weakness or contraction in the economy, and the number came in at like 44, is expected to be 48 or something like that. So we're showing some contraction in the economy. So the rate hikes are starting to take effect, at least economically. Inflation is still sticky. They use that word multiple times a day if you watch any of the financial media outlets, and they were talking about it again today. So that brought in the word the beginning of the week of stagflation. And that's the worst of both worlds. That's when you have inflation with weaker growth. So we'll see what the Fed has to say about that tomorrow. But if they start talking about any sort of rate cuts again, that could spur inflationary fears. If they start talking about a rate hike, the market isn't going to like that either. So it's almost like the Fed's between a rock and a hard place tomorrow. Can they thread the needle once again and please everybody? So it's going to be a really interesting. How you like that, Zach? I said that for you. Fed meeting tomorrow to see if they give us a hint one way or the other. My guess, and that's all it is, guess speculation, is that they're going to just try to say status quo. They're going to watch more data. Inflation is stubbornly high, but we're starting to see some weakness in the economy, and they're willing to take that is the key. They don't mind some weakness in the economy or weakness in the markets. They just want to fight off inflation. So I don't think they're going to give us any sort of hint about rate cuts. It's just if they mention anything about we're kind of mulling around, maybe we need one more rate hike, yeah, you're going to see a pretty big down day tomorrow in the markets. So all eyes on the Fed tomorrow, as Zach said. So back into this little trading range here. We take a look at the moving averages. You can see the 10, 30, and 50-day moving averages are all converging here. That's not what normally happens when the market goes sideways like this. We don't have a bullish cross. We're still on the negative side. That occurred back here. in the early parts of April, early to mid-April, and we've just kind of leveled off here on the 10-day moving average. So no real clear signal here. As I talked to our alert subscribers at EWOTrader.com, this is a point in time to just be patient. A couple of rules that were taught to me or that I learned along the way in all the years I've been doing this is patience is rewarded, and sometimes the best trade is no trade. So we haven't been super active on the alert side, and I think that's the prudent thing to do. Let's just let the market tell us which is the next way to go. You can see this wave 4 is still green, so we're still in the wave 4. That won't turn purple unless we take out this wave 3 high. So that means that we could have a bit more of a correction. Now there's two zigzags to talk about. If you watch the U.S. market update, and if you haven't, I encourage you to go do that on YouTube. We talked about we have dueling zigzags, if you will. The most recent one is the one that we're in right now. Well, I guess we're in both of them right now, but the more recent one is this small one right here that brings us down to a potential price target at the 100% extension right at 480. And we've talked about the importance of that level right there, because that was resistance back in December and January. If you want to hit the actual highs, then it intersects exactly where the 100% extension is. So perhaps we move downward. That would be if the Fed disappoints tomorrow. So that's a possibility. And then we also have a possibility to the upside. So I'll take this off just to keep it from being confusing. And if you draw a zigzag pattern from the lows that occurred back in January up to the highs that occurred right at the end of March, you can see this one's qualified as well at a 50% correction, and that would give us an extension up to 550. Right now, hard to see the catalyst for that. So far, we've been in a buy the dip mentality, but the Fed could change everything based on the commentary tomorrow. So tomorrow's going to be a volatile day. What normally happens when we have something like this is it's going to be one move that occurs on the actual announcement. So you get whipsaw moves, and you can actually trade this intraday because what happens right after the Fed announcement almost always gets retraced. So the initial move, if it's up or down, it's usually a big spike, and then we come back down. You know the rule about the 10-day moving average, that works on the short term as well. So perhaps something to consider tomorrow if you've gotten this software. If you haven't gotten it, go to hub.com, HUBB.com. This is the new software from the Hub organization that has live Elliott Wave, and boy, is it going to be fun to watch tomorrow. So if you haven't gotten it, go do it now so that you can watch this tomorrow, because we can switch this over to intraday charts. And I like the 3-minute chart. It's going to have the lines carried over from this, so it might be a little bit, here you can see those lines that I just drew, but that's what's going on right now. And if you have the software and you're like, well, I don't get Elliott Wave the way you do, right down here it says insufficient data. Elliott Wave, that's the algorithm, requires 377 data points. So if you're on a 3-minute chart, that's 377 3-minute bars. If you're on a daily chart, that's 377 daily bars. But all you have to do is condense the chart. So you hit the minus arrow here, and then boom. When you get to the point where it has 377 bars to analyze, it will give you the Elliott Wave. So there's the intraday chart. Looks like perhaps we've gone as low as we're going to go today. That would be suggestive here. We've got a tiny little triangle being formed right here. Not very large, but Elliot always said, don't diss the small triangles. So we're going to get a little bit of a break here. 505, it's not even a point on the S&P, but we're going to get a little breakout out of that triangle. So I'll go ahead and take this off. But that's what's going on intraday, and that, I believe, will be a wild chart to watch tomorrow as you see the big spikes. And as I said, most of the time they get reversed after what happens initially, and then when Chairman Powell has his conference, then it's going to be going all over the place again. The market will be reacting to the questions, whatever he says. So we're going to have a wildly volatile day tomorrow, in my opinion. I think that's what's going to happen. So it'll be fun to watch on that 3-minute chart. All right, so let's go back to the daily chart, and then we'll see how things play out over the course of the next 24 hours. It's going to tell us a lot. If we come down and break this 0 point here, then that means that upward zigzag is likely not going to be the qualified or the confirmed one, because if you're wondering, how can you have two zigzag patterns in alternate directions? Well, there's a difference between the term qualified and confirmed. We have a lot of education on our website at ewotrader.com that goes through and explains in detail Elliott Wave. We're pretty proud of the education that we have there. And so you can go and learn these terms, the terminology within Elliott Wave. And there was a post on the YouTube video that said that I looked at Elliott Wave, I don't really think it works. Well, my opinion, because I've been trading Elliott Wave since 2001, is if Elliott Wave hasn't been successful for you, it's likely that you don't have enough education for something as complex as Elliott Wave is. It's more than just looking at a chart with some round circles on it. It's far more complex than that. It's, what is it, like 26 pages front and back, so 50 plus pages total of coding. So it's more than just putting these numbers on a chart. And if you want to go through and learn it all, then I think you'll find Elliott Wave can be successful to you. Nothing is 100%. Elliott Wave's not 100%. Nothing's 100% accurate. But in my opinion, Elliott Wave, if I was ever told I can only use one technical indicator, I would use it. I'm also of the belief that no one should trade a technical trading system on one indicator. So when we look at things, we add in some confirming indicators. My favorites are listed over here under the favorites. And so you can see, I like the DMI. If you've watched before, you know about the DMI, created by Wells Wilder, who also created relative strength, RSI. More people are familiar with RSI than DMI. I kind of like that. My preference is the DMI. I just have found it in my experience, and I can only give you my experience to be more accurate. And you can see it's even saying we have no idea. The negative directional indicator and the positive directional indicator are kind of close together, ticking up and down a little bit with today's move. But all that is just dependent on what happens tomorrow. And then if you're looking for something a little more short term, which I think will be something to watch tomorrow on the intraday chart, you can look at the CCI. The DMI tends to be a little more lagging, where the CCI is very responsive to the day-to-day movements or the bar-to-bar movements. And so I had that in, because if you're going to have a confirming system and you only have something that's lagging, well, you're missing out on the quick responsiveness of what's happening at the moment. So that's the key to having a good technical trading system, is you put together indicators where the strength of one offsets the weakness of another. So if you like the DMI, because it's a great indication of trending strength, but you're concerned about the fact that, yeah, but it's a little bit lagging, well, then you add the CCI in, and that can give you something a little more short term. You put them together, you got longer term strength, you got shorter term strength, you've just put a few more probabilities in your favor. So that's why I like the CCI, and that'll be going nuts tomorrow as well. So we switch back over to the 3-minute chart, the intraday chart, and you'll be able to see that you can add that in as well. See how it's also on the 3-minute chart. So there, we've already broken down out of that little triangle. So the little move to the downside occurred, and we'll see if that's where we end the day or if we continue lower from here. I just feel like the market is going to take a pause today, and we'll see where we go. Notice the CCI is exactly at 0. It's non-committal as well. So we're non-committal on both the short term and on a little bit lagging term. when you see stuff like that, you just don't do anything. You're like, all right, let's just sit back and wait. Let's wait until these things agree and they're giving us some sort of confirmation within themselves as to what's going on with the Elliott Wave pattern. So which of those two zigzag pattern is going to be the confirmed one? We don't know yet, but one of them will be, and that's when you step in and start trading. So if you're an impatient trader, that's getting greedy, and that normally leads to failure and losses. Just be patient, wait for your opportunities, take them when they come, and then when things are convoluted, just stay away. Go play golf, do something along those lines until we figure things out. Don't play tomorrow, though, because you're going to want to watch what goes on intraday. I'm excited just to watch the fireworks. I don't know which way things are going to go. I don't know what the Fed's going to say, but I do know that that 3-minute chart's going to be wild tomorrow. So that's the S&P. Let's take a look at the DIA and see what's going on the Dow side of things. I had talked about this before, that we had some differences in the labeling between the charts, and you can see we have almost the same zigzag pattern, albeit a smaller correction in the wave B here, but the A wave went down to 38%. But see how those zigzags are lining up? When the markets get, I use the term convoluted, but when the markets get convoluted, normally they will come back in line. That doesn't last very long. So now, even though we have slightly different moves to the upside here, we both have these zigzags between the S&P and the Dow. Let's look at the Qs. I think the Qs are going to be wild tomorrow as well. We know we had the good earnings out of Microsoft and Google last week, but look at that. Same thing, a zigzag pattern to the downside in the Qs. So note that even though the big patterns have been relabeled, we're getting the same type of scenario. Sorry about that. We're getting the same scenario here within the different markets as far as zigzag patterns are concerned. Let's look at the IWM and we'll see what's going on there. So if we take a look at the IWM, let me finish this, close that off so that it'll give us a chance to move to the next chart. We'll see what the IDM is showing us from whether or not we're going to have agreement with these zigzag patterns between all of them. Take this off. All right, so let's see what the IWM has to say. And same thing. See how they all have zigzag patterns to the downside? We're getting all the patterns now, even though we had different paths of getting there, all giving us qualified downward zigzag patterns up to a 44, almost a 45% extension there. That would bring us down to 180. Are we going to break that 190 level? If we do, that kind of means we're back into the 170 to 190 trading range on the IWM, where we've been in 190 to 210 here, at least for this year. So if the market doesn't like what the Fed has to say, and all of a sudden all these zigzag patterns start lining up, then we can start to have congruence, if you will, with all of these zigzag patterns working out, albeit different labeling on the move to the highs that occurred towards the end of March. So every single one of those, the S&P, the Dow, the Qs, and the Russell, every one of them are in a qualified downward zigzag pattern right now. So I think that bears watching as well. Those are the different markets there. Let's take a look at interest rates on the TNX. The dollar is just staying flat. There's not much to show there. And it looked like maybe we were going to sprint up towards that 161.8% level, and we might tomorrow. So far, we're just holding right in that 100% extension. If you wonder why we like zigzags so much, this is my favorite one, where the B wave comes down to that 61.8% level. Extremely high percentage of the time, you're going to go hit that 100% extension. And look what's happened since we got there. Nearly 2 weeks, just right at that 100% extension line. So one of two things is going to happen here on the TNX. We're either going to break that level and come test the previous fib level, which would be the 61.8% level right there around 44, or we're going to sprint up to that 161.8% extension, and that puts a 5 handle on the TNX. I don't think the markets are going to like that either. We start to see a 5% rate on the 10-year. I don't know how that helps, especially the Qs, the big tech stocks. So once again, all eyes on not just what the Fed does tomorrow, but more specifically what they say. So just sitting right here in the rate world, waiting to see what's going to happen from here. Bitcoin's having a little bit of a pullback today, still in that trading range between 60 and 72. And nothing really to talk about regarding Bitcoin unless we break below 60,000 or above 72,000. We're just staying in that trading range. At some point in time, it's going to move and break one of those levels. And once it does, then we'll bring that to you and show you which direction Bitcoin is moving and where to go from here. You can always get an idea of what's going on in the crypto world by looking at Coinbase. So if we look at Coinbase, we had this triangle. We broke and formed another triangle. That doesn't happen very often. That's kind of unique. It does happen, obviously, because it did right here. But you can get triangles that break out and then recover. And we didn't quite make it back to the midpoint of the triangle, which is what usually happens when a triangle breaks out. So you could have looked at this triangle and said, oh gosh, I think that's going to break to the upside, and follow that rule where you normally go back to the point of a breakout of a triangle. But this is exactly why I talk time after time after time that you don't pick a direction when you have a triangle. You have to note that a triangle can break either direction. It would have made a whole lot of sense to say, all right, we consolidated here. We had the breakdown of the first triangle. We're going to go back up to this midpoint. And yet down we go today on Coinbase. So another downside breakout out of the triangle. Well, now we're at the point of, all right, what are you going to do, Coinbase? We're at 200. That's the level of support. It's kind of the resistance area from the end of December, early January, as well as the end of February, early March. So which direction are we going to go out of this triangle? Well, at least one day we've gone to the downside. Now, if you've also been listening, you know that one day doesn't mean anything. You have to have a follow-through day or a confirmation day. That's where it gets a little bit dicey on Coinbase, because if we follow through to the downside, that likely means we break the 200 level. The alternative is that the wave 4 is right at the 38.2% fib corrective level. That could hold. This could be a false breakout right here. It could be a false breakout to the downside. And then we do turn and run back up and go back up to 250, which would get us back to the point of that triangle breakout. So once again, don't do anything right now. Wait, let's see what happens. Because if we break down under 200, you can see the vertical nature of this move from 125 up to 200. It was almost straight up, barring a little bit of consolidation. Could that hold right here? I don't know that that's strong enough to hold it. Maybe on a downside breakout, it could be, but we'd be looking somewhere in that 160 range. See exactly where that is. Using the crosshairs here, 167 would be where that support is if we do get follow through on Coinbase tomorrow. But today, as I said, could simply be a false breakout, but it garners watching. So you pay attention to it and you say, okay, here we are. Where do we go from here? Do we get a reflex bounce and this was a head fake to the downside and we go back up to 250, or do we break below 200 and then we're looking at 167? So whatever happens tomorrow, will tell us there. So all kinds of different things to look at here when you're dealing with triangles, especially with how the crypto world and Coinbase is acting right now. Let's throw in a couple of the international markets. And one of the markets that I'd like to look at is the EWA. Looking at Australia, we do both the EWA and the XJO on Thursday nights for our insiders only. That's our alert subscribers at EWOTrader.com only. We have an extended Q&A there. Here we have a limited amount of time, but you can see we're just kind of in a trading range here. Also, the 10-day moving average going sideways. So we're in this range between, call it 23 and 24 and a half. We have been in that range since the entire year. So for the whole year of 2024, the EWA has just been in a sideways move. Let's look at Canada real quick. Throw in a couple more international markets. Some consolidation here in Canada, but notice how the EWC has a downward zigzag exactly in line with the zigzag pattern that the U.S. markets all have. And that would bring us down somewhere around 36 and a half. And that would be the lower end of this area here that we traded through for the first part of the year until we took off in March, hit that wave 5 high, and coming back down here, the wave 5 extended 87%, not out of the realm of possibility that this corrective move brings us back to the previous 4, which would go a little bit below the 100%. Two more to look at real quick. The EWG Germany, also in a trading range, so also in a downward zigzag that's qualified. You see all these patterns are looking the same, and that's why I was mentioning when things get discombobulated, if you will, they oftentimes come all back together, and the 100% extension on that downward zigzag would bring us right into that area where we've had some congestion, call it consolidation, right around 29. I think that makes a lot of sense. If you're looking for a downside play, I think the EWG sets up extremely well. And then the market that had been bucking the trend for so long, the INDA still is. Notice the difference. Also in a zigzag pattern, but it's in an upward zigzag, where all the other markets are in downward ones. Now we are in this wave 5 tap box. We moved the wave 5 in yesterday's trade. So that's setting up here. We didn't move it. The algorithm moved it. All I do is just try to read the charts as best as I can for you. That puts the 100% extension up near the top end of this tap box. Time and price projection is what that stands for. So that's the range in which it could go. And the upward zigzag pattern takes you there. So if you're just itching to do something long, you're like, I don't like all this short stuff. If you have to do something long, then maybe that's the place to be, is the INDA. I don't know where else you'd want to go, but that's one to take a look at. Couple of the open positions that they might be considered open. Recent case study considerations here at TradeFinder. ROL has been bouncing back to the upside rather nicely. We had it moving up as high as 49, which would get us above this wave 5 high. So we had this correction. We moved back to the upside. We're back above resistance from 44. We're sitting on it right now. We're sitting on the 50-day moving average. On the high of the day, got a little bit above the 10-day moving average, but so far, that one looks like one that could continue to go to the upside. And then on Stride, LRN, that's made a pretty nice move up here to getting in the area of the recent, that was a weird spike there on the wave 5, but we're up testing it again. Notice we're a little bit overbought. We have a target price up around 79, so I think you stay with that one. So those two recent case study considerations are looking good. And then on the 16th, we looked at BEN. And this one, that's a home run, folks. So if you follow along with that one, our target price was 24. You can see right now we're trading at 23. So we're taking that off. We're going to take that gain on BEN. So that's a winner. So the other two are looking okay at the moment. Again, everything could change tomorrow. So we had the Google trade that was a big winner. We've got a big winner out of BEN. And so between those two, you've got a couple of nice gainers there and a couple that are still in the area of potentially moving to our target price. So all in all, looking pretty good. Then last week, we had our crypto expert on, and CLSK was not from one of my searches, but from one of his thoughts, and that's with a target price up around 27, and we're at an area of support. So with a little bit of a move down in the crypto world, this is move lower, but if it holds right here, no harm, no foul, and we'll see if it can maintain this area. We're sitting right on top of the 50-day moving average, and maybe this one's a little bit longer term, but that one came from our crypto expert last week. That wasn't from one of my searches, but a little bit of a pullback since last week, but holding at an area of support where it needs to hold. If crypto turns and goes back to the upside, I think this one goes along with it. It has earnings coming up. Let's see, when is the earnings report on CLSK? It's not too far away. It is on May 9th. So May 9th is the earnings report for CLSK. And his viewpoint was these miners are going to be surprisingly good. Most people feel like with the halving that occurred on Bitcoin, that it's a detriment for these. His viewpoint's different. So we'll see once that earnings report gets there. So as long as we can hold this 50-day moving average, I think you want to try to give it the opportunity to move to that earnings report. And if it doesn't, if it breaks down, well, then at that point in time, you need to get out and then just look for potentially a new entry along those lines if it were to continue to move back. As far as our website, when we look at potential moves on the website, I wanted to feature one here on NEE. So allow me a moment here to go ahead and reshare the screen so that we can show you this one. And I'll switch the chart over to show you that. And there you go. This was out of our AI portfolio. You can see we were in it for 12 days, 20%, but it was an upward move. This is interesting because this is actually an energy company here in Florida. So I felt like I had some familiarity with it. When you get a quick gain in this market, you take it. So we've been going through and picking and choosing our spots, and that's what you need to be doing in this type of a market. And by the way, our alerts at EWOTrader.com, EWOTrader.com, all look like this. Every one of them gives you all this information. It gives you the chart for the entries, and it also gives you the chart on the exits, gives you commentary, tells you exactly what the alert is, so you get alerts on both entries and exits, not just considerations as we do here at TradeFinder. All right, so let me switch back over and get back to the chart, and let's see if we can find a case study consideration for tonight.
Hey, Rob, that is your face cam.
Oh, switch the wrong one. Okay.
Yeah.
Acknowledge.
Yep, that's your face cam there.
Okay, so the other one.
Mm-hmm. Got it.
All right. Awesome. I didn't even have to. That's the right one. Cool. All right. So let's find something for today. Now, when we come over here, first thing that I look for is the AI signals. I get sent these from the data scientists, and we send out alerts on our AI-based portfolio. That's where that NEE one came from. But we have limitations. The scores. We want a score of 75 or above. And you can see there are two bullish candidates, but the highest score is 63. So that isn't anything that we would do. So we also get bearish alerts as well. And there's only one result, and it's also a low score. So even the AI is telling us the best thing to do right now is likely not do anything. I do have something that I want to show you that came off of my search today that I think garners some watching. There were actually two results that came out. The first one is TT, is the symbol, Train Technologies. And you can see that would have been great had we had TradeFinder yesterday, because look what it did today. that's a negative on the fact that it gapped up today. So it was on my search, but coming on at 1 p.m., it's too late. It wouldn't have mattered if we were on earlier because it opened as a gap up. And you know I hate gaps. So that's a negative when you see the big gap up. So that's a shame. So basically what the AI does is it takes the searches that I've already given and it puts AI scores on it. So the AI didn't feel quite comfortable enough in this. It still worked out. So imagine when you get results like this and the AI confirms it. That's why the track record has been so good. And you can go to EWOTrader.com and see the track record there. That's a little troublesome there as far as the target price is up around 340. And I think if we take a look at that high, we're going to be so close to it that it doesn't warrant doing 326. So perhaps there's still some more upside to go. I just hate the gap. Let's take a look at the other one and see what that one looks like, which is Axos Financial. What makes me nervous about this one, which is symbol AX, is the fact that it's a financial. And look how it's been consolidating here. Depending on what the Fed says tomorrow, that could likely move. Now, when I see something that's a consolidation like this, I want to see where that ADX is. And if the ADX is really low, then I'm interested in doing a strangle. But the ADX isn't quite low enough. Right here, it is at 15. I want it below 15. So I don't think we're going to get the opportunity there. So I like to put strangles on when the ADX is below it, but it's just above it. I think you'll see some sort of a breakout move on AX. The Fed tomorrow, if you're super aggressively minded, you could say, let's just forget that whole ADX below 15 thing. The financials are probably going to move tomorrow, depending on what the Fed does. I wouldn't hold that against you as long as you knew it was a very aggressive trade. If you've watched in the past, you know that I've tried to give both aggressive and conservative ideas because we all have different risk tolerances. And you need to know what your own are. If you're very aggressively minded, no, that's higher risk, potentially higher reward. But remember, part of that higher risk, higher reward is higher risk. And if you're willing to do that, as long as you understand the risks going in, that's up to you. If you're more conservative, then let's let this break, and then perhaps we have enough room to trade the directional move. So that brings us back to Train Technologies is the only other one really that we can look at for a consideration. Nothing on the AI. This one on my search that already gapped up this morning. Look at the DMI. It's setting up nicely. The target price is a little bit higher. So we're going to go ahead and use this loosely as our case study consideration for today. And I say loosely because I just don't like the gap part of it. So, consider that as a little bit more on the side of aggressive move. But TT should go up to 340. And then Zach, if you have a moment, be great if you could show the folks how they can go in and post an idea on the website, because that's one of the great things about this platform is not only do you have Elliott Wave, live Elliott Wave, and all the charting features that I've been showing you, but we also have a social media aspect to it as well, where you can go in and post ideas. People that have the software and sign up, they can look at your idea and they can vote on it. Say if they like it, they agree, they disagree, and disagreements are no big deal. That's what makes the market. I don't ever begrudge anyone that disagrees with me, because if everybody viewed the markets the same way, we wouldn't have markets. You have to have a buyer and a seller. You have to have someone that believes long and somebody believes short at the same time. Otherwise, there's no markets. So we are off the highs on Train Technologies. And so perhaps that gives us a bit of an entry. Right now, we're trading just under 320. So we would look for 340 to be the target price there. So with that, Zach, I'll bring it over to you and let you show the folks how they can go in and enter their own idea if they have the platform.
Yeah, absolutely. I'd love to. That sounds like a plan. Hopefully everyone can see my screen here now. I am just on the Hub webpage, so we'll go ahead and log in. First, before I do that, I just want to remind everyone that's watching us live right now, joining us live on YouTube, to smash that like button for Rob. It does go quite a long way for our algorithm and overall for our channel, so we do appreciate it. If you've enjoyed the webinar so far, again, that's one way to support us at no cost. And at that note there as well, we are going to be moving away from Zoom altogether for TradeFinder. We're not going to implement this in the next week or the week after that, but pretty soon. So we'll have enough time to give you verbal and written warnings. That sounds so extreme or harsh, but announcements rather is what I'm trying to say. You'll have a few weeks or a couple weeks at least to prepare for that transition. But essentially all it's going to be is just joining a YouTube link instead of joining a Zoom link that you receive like for the insiders meeting. So I'm going to go ahead and drop the link to sign up for a YouTube account if you don't happen to already have one in the Zoom chat there. So please go ahead and click on that and create one. It's free and you'll be able to join us there. And again, it's mainly due to the fact that we are continuing to grow as a company, and we have just grown a bit too big for the amount of subscribers we have for Zoom on TradeFinder. So it's just for efficiency across the board. And again, it should be a pretty seamless transition for you. So that's there. We'll go on to now logging into the TradeFinder platform to post the idea of this session. So as we can see, I just logged in my credentials for the TradeFinder account. And here we are. So this is, again, a menu view, a jumping off point of all the different features throughout the platform. There's so much to go through, and it's very, very interesting as well to take the time to really explore and navigate through all these different sections and modules and see what the platform has to offer in regards to functionality. But for this session, we just always go through the process of how to post an idea. So we go up here to the light bulb here where it says ideas. We'll go to new idea. Now, again, I always just like to review or remind everyone watching that there's a difference. There's a distinction between both an idea and a post. An idea is simply a way of saying that you are going to action this trade. You're ready to enter this position on whatever it may be as if it were a paper trade. You're not actually putting any capital at risk on this platform for these ideas. However, all of the data is real time. All of the analysis that you're doing is real time. So it's as spot on as you can possibly get to the exact experience of actually trading, executing the position, and being at risk involved in the position without having any actual capital there. So an idea is when you're ready to submit that position, whatever it may be. Now with a post, that's essentially a draft idea is the best way to look at it. it's something that you might need a bit more time to see a pattern play out based on what you're looking for an ideal position or strategy that you're going to use, macro factors, whatever it may be. You might just not be ready to pull the trigger on creating an idea. So that's where you create a post, which is kind of like a reminder for you to have that to refer to. And then once the time is right, you can change that into an idea. So we'll go on to create an idea here. And Rob, if you don't mind, just sending me a refresher on a quick one-liner here.
Send it to you right there. Trading Technologies is it's in a wave 3 to the upside with a potential price target of 340, and the DMI is supportive of a continued move higher.
All right, so that'll be the description, which we'll add to. So we'll go to the symbols TT. We will go to a target price of 340, and this is going to be within.
Let's do 3 months due to the fact that it gapped up today. So just to give it a little time if it wants to consolidate that gap up. So lots of time there.
Okay, so I'm just going to save this as to the upside for now, and I will come back and make this nice and pretty as soon as this session is over. And other than that, I save that as a draft. If I was ready for it to post, I obviously just would have said publish as an idea, and you would see it here now available under the ideas. One of the very cool features about this platform is that you actually can be held accountable in many different ways in regards to your reputation on how your reputation and how you've posted, your track record on those ideas, and also just how you've been able to gauge and analyze other community ideas. So, for instance, I can agree with this idea here from our subscriber Ringo1 there, and say I like what I'm seeing here for at this moment in time. There's still 21 days left. Say it gets closer to the 10-day mark and I'm not liking what I'm seeing, I could come in here and disagree. And so there's just always the living capability of each of these trades to interact, share your ideas. You can keep adding different charts for different analysis that you have to maybe counter or agree with whatever this person's idea may be. It's just a very good way to stay interactive within the community. And so lastly, I'll say one thing I'll show for this session here is the My Feed. And this will show essentially an update for anyone and everyone who has updated any of their ideas. If they've posted a new idea, if they've commented on someone else's idea, if they're closing their idea because they hit their price target, anything and everything related to all the ideas you can find within my feed. And this is going to be a bit more of a discussion forum, just as our messages and groups here over here on this community window is. So I can go on and on for many, many more minutes on explaining the different functionality on this exciting platform, but we have plenty of sessions ahead on that to roll out with tutorials and more information on the overall feature functionality that is yet to come. So I believe that covers everything for this session, this portion of the session. I'll pass back over to Rob for wrapping up the market.
All right, well, pretty much said everything that I wanted to, Zach, so let's go directly to the Q&A.
Awesome, sounds like a plan. Let's go over to TOL for our friend Will.
Oh, brothers. That is going to be interesting tomorrow as well, so we'll look at it now, but I think depending on what the Fed has to say tomorrow, and what rates end up doing could have an effect here. I left the DMI on because when you look at this chart, it's another one that would be pretty interesting as far as a triangle formation that it has. So it went up to the wave 5, right in the middle of the tap box, almost to the upper end of it, and then came back down and consolidated. It's consolidating above the 50-day moving average. The point of the triangle is exactly at the 10-day moving average. This is going to be very similar to that AX potential case study that we looked at, where we have a great looking triangle. It's probably going to break out sooner than later, likely on whatever the Fed has to say tomorrow regarding rates. But then when you look at the ADX, it's down at 20. So it's not low enough for me to consider sending this out as an alert in our volatility portfolio, which is one of the portfolios we have at EWOTrader.com for triangle breakouts. The ADX is just not quite low enough. We try to stay within the parameters of what we send out to our subscribers. Is when you see alerts come out in these portfolios, these are the rules that they're following. So one of the rules is the ADX has to be below 15. And since it's not, I couldn't send that out. But I think there's a high likelihood that you're going to see the breakout come, if not tomorrow, then on Thursday, following whatever the Fed has to say with their announcement tomorrow and press conference.
Very well. Thanks, Rob. James here says AI possible play on E, as in earnings, or it might be the stock E.
See what is E. I'm not familiar with this one.
I'm not sure if it's the stock E or earnings. It says AI possible play on E.
Well, if they come out with their earnings report and say anything about AI, probably moves to the upside. Is consolidating, as a lot of stocks are. I wish we could get a little more consolidation, because we would have strangles all over the place with all these consolidations. But once again, the ADX is at 17, so it's not quite low enough, but a really well-formed triangle, and it's going to break. I just want to be clear that even though having an ADX below 15 is one of the rules that we follow for our triangles, in no way, shape, or form does a triangle have to have an ADX below 15 to break out. Triangles break out all the time. But on the other side of the coin, the ADX, when it's very low, the ADX is normally telling you the strength of a trend. So when the ADX is very low, it's telling you it's trendless, which is confirming consolidation. So when the ADX gets really low, it's telling you the breakout is likely to come sooner rather than later. What can happen when you have a triangle and the ADX isn't low is that the triangle can continue to consolidate and form a larger triangle. And when you're putting on a strangle, you're buying a call, you're buying a put. Time decay is the arch enemy. So you want to try to time it closer to the breakout as possible, knowing that there's no way to do that with certainty. But one of the things that I found that kind of puts one of those probabilities in your favor is if the ADX is low, the likelihood is it's going to break sooner rather than later. And when the ADX is higher, again, you could consolidate for a while longer and form a larger triangle. Doesn't have to do that, but that's one of the rules that we follow. This could break tomorrow. I'm not sure. So not familiar with the stock, but another nice looking triangle. We're seeing a lot of those today.
Yeah, so Jane says stock is AI on earnings play.
Oh, the stock is AI. Okay. Oh, yeah, so C3.ai. Well, it certainly had a pretty rough looking wave 3 to the downside. It's already given a bit of a bounce, though. So could it move on earnings? It could, but the resistance is right there at 25. So I would be more apt to, well, let's see if we can break back above 25 if it comes out with a great earnings report. And then you enter, because we could break up there and then fall back, because that's going to be a pretty decent point of resistance. Look how far back we go, where that 25 level has been support resistance. It was sideways through there last fall, broke above it, tested it at the beginning of the year, tried to break higher, went too vertical, gapped up and went vertically. That's like a double no-no. And so, as we know, what goes vertically up oftentimes comes vertically back down. So we got the gap filled, but then it broke all the way back down. And breaking below that support level would make you want to go short. But it went short so fast, now it's giving you a little bit of an oversold bounce. So you have to watch this one and see what happens on whether or not it can move higher and break above 25 on earnings, or if it rolls over and heads a bit lower. Let's condense the chart, see if we can figure out where, gosh, all the way down to 10 on the downside. Maybe a little bit higher than that, maybe more like 12 would be where the next area of support would be. So if they miss on earnings, you could see one come down as far as 12. So I would just watch that earnings report. The options will be cheaper after earnings anyway, and then trade it either to the upside or the downside. So you got plenty of room to the downside there if they miss on earnings, I think, unless it gaps down. But interesting chart.
Interesting indeed. Yeah, I can't say I've looked at that one at least in a long time, if ever. So we'll go over to MGM or Lisa.
Well, now you're getting into an area that has had some volatility, as you can see, up, down, up, down, up, down. Not really going very far, just kind of churning in a trading range. The interesting thing here, the wave 4 is right at the 61.8% fib level. So that would be something to catch my attention. It did break below support there at 42.5. The other thing that's interesting about this is based on that Chicago PMI that came out this morning and a weakening economy, is when the economy weakens, money tends to rotate. Remember when I was talking about money rotating internationally? Money begins to rotate into what we call, or what's, I don't call them that, but they're widely viewed as the SEN stocks. It's a defensive sector: alcohol, tobacco, and gambling. That's why they're called the SEN stocks. Tend to be a place to hide when you're getting a weaker economy. And the viewpoint there, and the reason they came out, there's actually an ETF called Sensational, spelled SIN, which has all these stocks in it because of the viewpoint that no matter how bad the economy gets, no matter what's going on, we're still going to find a way to do our vices, drink, smoke, and gamble. Those things we'll find money for those, even if the economy is weakening. So being right there at that 61.8% level, maybe we bounce from here. But also, if we get any further weakening economic data like we had today, then perhaps you start to see a rotation. But I don't know that you want to go long here until it breaks above 42.5. It's too much resistance there. We could get an oversold bounce right up to that level, but that's all it would be until it can prove it can get above 42.5. Now, if it does that, which it has a chance right here at the 61.8% fib level, if it breaks above 42.5, then you can see the wave 5 target is up near 52.5. So it's got a pretty decent room to run there. But the most aggressive trade would be a very short term, like 1 day trade on a tiny bit of an oversold bounce. But the more conservative trade, let it break above 42.5. Then you have plenty of room to catch that continued move higher in the wave 5 if it wants to do that. But if you like the macro views, and I just kind of went through and explained them to you, that's something that's interesting to watch, I think. Keep an eye on that one and see what happens with that 42.5 level.
All righty. Well, we are right after a minute after the hour. That was another phenomenal session, Rob. So thank you for that. There's a few comments, questions I'm going to cover here, and then I figure we'll wrap up with one question for you, if that's all right with you.
Absolutely.
All right. So we have a question here from Tony. Do these ideas get sent out as alerts also? And so the answer to that is sometimes, not always. So as Rob will be sure to announce that if it is going to be an alert sent out right after the session. But for the ones that are just posted as ideas, those are not to be taken as also simultaneously posted on EWO Trader. Those two are still exclusive. Now, with the next question, will any of Rob's sessions stay on Zoom, or is everything moving to YouTube eventually? It's a fair question. We actually have to stay on Zoom for some of our sessions for our paid private groups only, as we can't obviously live stream that to the public, or that would defeat the whole purpose of having the paid membership in the private group. So we'll always have Zoom for the private paid membership sessions. However, for this live session that's always been free and streamed on YouTube, it just makes the most sense for it to be on YouTube, and it's been also creating bandwidth issues between Zoom and not being able to support the amount of subscribers that we now have. Lastly, on Tony's question here, is the earnings indicator available on the new system yet? I believe if it's not activated, it's certainly been written in, coded into the system. We're just waiting for that next patch update. There's been numerous bugs and patches that we've had, or not patches, but bugs and errors that we've had reported that we have logged, organized, and prioritized, and those will be fixed and addressed on the next patch update. So don't feel like it's just getting disregarded. It's just a matter of being able to address them all in that one patch update. Lastly, Arena here says, could you please have a look at on semiconductor? On one side, the chart has double bottom with 1101.23. On the other side, the fifth downward wave has just begun. Thanks.
Okay, we'll finish up with that. And just to echo what Zach said, remember the software is in beta form, and that's the whole idea. I've kind of a little criticism for this, but it was always frustrating to me that with Microsoft Windows, every time they would release a new version, they just sent it out there, and then they let everybody send in the issues that they find, and then they would issue patches out for it. They're trying not to do that at Hub. That's why we're in beta form. They're trying to figure out as many bugs as they can before they do the full-blown official launch. So all these little things that we're finding are being fixed before the official launch. So those of you that are in beta form, you're helping us out or helping the Hub organization out by finding those little things that can be fixed before the full-on launch comes. So that's why you have a beta launch, is to figure these things out, unlike the way Microsoft did things where they just sent it out anyway. So looking at ON, I agree with you 100%. The wave 4 has had a pretty vertical move. We got a little bit oversold from the 10-day moving average. You can see where the wave 3 low was, a little separation there. So we got an oversold bounce, a big one. Now we're right at a 50% correction on the wave 4, which also coincides with some resistance right there around 75. And it is in a pretty well formed wave 5 to the downside pattern. So I like this one to continue to the downside. The only issue here would be, or the issue would be, and that makes this one compelling from a risk to reward standpoint, is if it breaks above 75, that's your stop. Get out. So if it could break above 75 with a follow-through day, you exit. That's your out. Other than that, a resumption to the downside seems to be in the forecast here. So good on you for spotting this one, because that's a good-looking Elliott Wave pattern. And it has a good risk to reward profile here, with the fact that breaking much higher above 75 is your stop. So yeah, good spot on that one. I like that one. And let's see if it makes it to 75, and if it does, how it handles that. So that's a short unless it gets above 75. So I like that a lot. Zach, thanks for all of your multitasking behind the screens. I don't think people fully realize all the things you're doing behind the scenes, and then showing people how to put in ideas, etc. A lot of work. So yeoman's job. Appreciate it very much. Thanks for taking part of your trading day to watch us. We appreciate your time very much, and we try our best to make it as informative and educational as we possibly can. Enjoy the rest of your day. All eyes on the Fed tomorrow. Watch those intraday charts. It's going to be crazy, in my opinion. Take care, everybody.
Take care.